Hello, everybody. Thanks for being a part of the Why Should I Refer You podcast. This is Mike Garrison, your somewhat fearless leader and chief bottle washer. This podcast episode is kind of a warm up for a long series of podcast episodes. It's a slightly different format. And what we're going to be doing is we're going to be diving into the world of exit planning and driving growth in companies. And basically, how do we help clients, businesses grow and be ready for a planned or unplanned exit? This is big stuff. And really, this series is aimed at owners of financial advisory firms, successful ones. Here's the big problem. Referrals by nature are about collaboration. And I really, when I first got exposed to exit planning through the Exit Planning Institute's Certified Exit Planning Advisor certification process almost 3 years ago, I was blown away at how much similarity I found between the collaborative process that is inherent and mandatory in exit planning, how similar that collaborative process when it's executed well is like my can I borrow your car methodology. This concept of being a safe driver, of avoiding car wrecks and protecting relationships. All these things are absolutely essential when you are collaborating with other professionals for a multi-million-dollar exit for a business owner client. And so what I've learned, though, and this is just through experience, is that while there are a significant percentage of people in the exit planning world that are financial advisors, a lot of them are not as confident as they could be about their role in the process, how to manage risk and create more opportunity, and how to understand when, why, and how to bring in the right collaborators to work with their clients. And there's a kicker. The kicker is I'm always about trying to create things together. Collaboration, in my opinion, should not just be about collaborating on business and clients that you already have. It's kind of table stakes. If you like each other and you do well, right? You should, over time, refer each other kind of internally to your own client bases. But the highest form of collaboration in my mind, and especially in exit planning, is getting net new business for you and your collaborators. And like, that is a different thing, right? So and financial advisors, I think you'll understand this, like, the risk perception that you are going to naturally have, well-deserved, of bringing in outside business professionals to work with some of your biggest accounts, or at least prospectively biggest accounts. If you think about exit value of your client base, if you haven't tabulated that, you really should. But if you think about it, that's a significant amount. And as you get more and more successful, the ability of your organization and your team to continue to harvest small accounts gets compromised. It gets challenging to, if you're naturally evolving either through time as investments grow or because your network evolves as well. If you're evolving to more complicated and more lucrative client engagements, you start to have a challenge if you keep adding less valuable ones. And so you are naturally going to flow toward, how can I create future opportunities that are going to be ideal, that are going to represent a high value for the prospective client and a high value for you and your team. And so when you look at that, going out and creating that, there is a risk perception with that, which is, hey, maybe I'm not super comfortable selling, but at least you're not alone. If you collaborate with the right people, they might be able to help. But then when it looks to taking an outside person into your client base, that's a big risk. That's opening up your auto garage and saying, hey, want to come in and take a look at my Ferraris and Bentleys, and you're always worried that there's going to be a car wreck. I just wanted to give you that background. So here's the good news. I'm going to be real succinct, and then we're going to kind of give you an overview. You own the process. executed correctly, in my opinion, and I'm writing several books at the same time about similar subjects, executed correctly, the financial advisor owns the timeline. And the reason is really simple. Number one, you are more accountable in the exit planning process than any other professional. I don't know if you knew this or not. You probably felt that way. And I'm telling you, you were right. You were right. You should feel that way. And here's why. You're the only person whose maximum amount of compensation occurs after the exit. Think about it. You can make great revenue servicing business owners. There's tons of things they need. So they're not a bad client pre-exit. But if you're involved in an exit planning process that is working, a couple of things are occurring. Number one, if it's the right type of business, there are chips being taken off the table as you manage risk. So think about it. The business owners that I run across, average amount of net worth that's involved in a business is always north of 50%. I can think of one specific case. It's one of my cousins. It's always over 50%. So inherently, we've got a tremendous amount of portfolio concentration, which is, we know in financial services, that represents risk, baby. Right? What if something happens? So if you have the right people involved collaborating with your current clients that are growing a company with an exit at least hoped for, you should be getting revenue along the way, because they're going to be taking care of employees, insurance products, and then more importantly, ideally taking some of the chips off the table, transitioning them from being in the business to other investment options, which I think you can handle. Then, if you think about it, then we've got that big exit, which obviously you need to be involved in ASAP. You have to be talking to that business owner about the tax ramifications of whatever strategy all the other people that talk to him or her about. You got to make sure, because you're the one who's going to be held accountable. Think about it. Everybody does all their work. They did it wrong, and there's a massive tax bill. And I hear about this weekly. I mean, weekly. And we're talking millions of dollars. And it crushes business owners. Do you think the financial advisor for that business owner who all of a sudden get crushed on taxes because there was another person's error, you think that financial advisor is keeping that account? Maybe the first year, but you are an endangered species, because you're going to be tied forever to this huge unfavorable action. So enough of all of that talk. So the first thing, that this is kind of like the three phases we're going to be going through. We're going to be talking about the core phases of exit planning for financial advisors. Whether you're a SEPA, whether you're a member of BEI, whether you're in a growth drive community, there's a couple other organizations. The name is just escaping me. They've got local chapters all over the country. Whatever way that you as a financial advisor are involved in the exit planning process, meaning if you have a business owner client, whether you like it or not, you're involved in an exit planning process. So what we're going to do is we're going to kind of define what that looks like. I am going to lean heavily, as I should, on the work of the Snyders, Chris and Scott Snyder, Walking in Destiny, kind of the textbook for exit planning, and the SEPA designation. Proud to be a member of the year in 2024. I'm proud to be on the faculty. I've had so many opportunities and seen so many amazing people. I'm getting ready tomorrow to fly down to Florida for our annual Exit Planning Summit and see all my friends and clients. So we're going to kind of talk about that process, but we're going to talk about it from your perspective as a financial advisor. I've had a 76624. I've managed and worked with, so I get it. So we're going to talk about the stuff that you may or may not have learned, but I'm going to do it within your language and your terms. I'm going to do it from your perspective because I get it. The other thing we're going to talk about is what are the roles and timing of each professional. Literally, my goal is to have a newsletter and a podcast going deep into every critical player in the process. So we're talking 8 to 10. And then we're going to talk about, so that's kind of the thing. It's like, what is it? How's it work for me as a financial advisor? Who are the other players? What's important to them? What's going on? Then I'm going to talk about, which will be huge, how do you identify, recruit, onboard, bring on the members of this team? And some of them you may even end up employing if you're an independent RIA or not, right? But collaboration, communication, how do you prospect and sell together. There'll be one of those episodes. How do you go after business owners? And then we're going to talk inherently in there about how do you use this exit planning process to grow your income through their revenue, right? And then how to we already said it, but how to win new business. Basically, the concept is the first article's out. It's on my Can I Borrow Your Car Substack. Introduction for Modern Exit Planning, Setting the Stage for Growth and Collaboration. At the end of the day, here's what I want. I want financial advisors who are, if not the most important, one of the most important relationships for a business owner that is looking to have a great business and an exit on their terms, or at least with better options. And in fact, the 2023 exit planning survey that Exit Planning Institute put out said that financial advisors had moved to number one. What's interesting for me is all of you guys and gals are the number one most trusted source, but I don't see enough confidence. I see confidence. You know what you're doing. You understand how to take care of your clients. You understand how to do financial planning, asset allocation, asset management. You understand complex tax things. But the big thing is I want you to be confident talking to that business owner on the business side of the table too. You don't have to have an MBA. You don't have to have every certification there is. I just want you to understand this is what I do. This is the timelines and the roles of other people so that you can be confident and do it. Because at the end of the day, because you're the most accountable, you're the most significant. You're the most important, right? At the end of the day, on the way to the exit and after the exit, you're going to be talking to that business owner about their family, about their life, about their dreams, about their goals, about their future. You're going to be helping them plan for and navigate good things and bad things. And so that's what this is about. I look forward to all of your thoughts, comments, questions. If you want to get involved, maybe have you on one of these podcasts, let me know. I'd love to talk to you about it. But most of all, be a safe driver, collaborate, and be a human. Thanks. Have a great day.